Dip buying has boosted U.S. stocks in recent years, but now investors have adopted a sell the rally mentality. That's according to JPMorgan, as the S&P 500 struggles to find a floor. The benchmark index now down 7% from its recent highs. Joining us now from more Yahoo Finance's head of news, Myles, Udland. And Myles, I'd love just to get your sense and your sentiment just in terms of the degree of the selling that we've seen and I guess how tough of an environment it is right now for equities.
Well, Jared was talking about the NASDAQ heading into correction, and I think what's striking about that is the speed with which we went from record highs into correction territory. It was only on February 19th that we saw record highs, record closes for the stock market. Of course, in 2020, we also saw February 19th record closes as well. A little bit of symmetry there, but I think the problem that you have for the market right now, if you want to say where are the dip buyers, is there are really two distinct reasons that someone might come in and say, I want to either degross or just outright sell some of these names that I've been holding on to. The first is the one that we talked about. You talk about endlessly, valuations, as it AI, all these AI plays, watching how the S&P 500 has gotten skewed with certain of the mega cap names doing so much, not just of the price performance, but of the earnings performance as well. Any thought that there's a slowdown in growth, and you really saw it on that quilt with consumer discretionary, tech, really driving that downside action. You have that factor, and then obviously all the tariff headlines, all the concerns that might bring about, just the state of the consumer, state of the economy. That's kind of the macro reason, and there's always macro reasons that come and go. And I think the buy the dip meme is really built on the idea, has been built on the idea over the last decade that the U.S. economy, in a macro sense, will work itself out, and that has been true, right? That was true in 16, that was true again in 18, that was certainly true as we came through the pandemic, and the question now is do you think that President Trump is a reason that doesn't work the same way? People can debate that, and the market's obviously going to work that out in real time, but when you combine that with just the, let's call it the spreadsheet reasons to be more concerned about markets. That's a 1-2 dynamic that isn't great, in the near term here. And I think why we've seen so much downside momentum in the last few days. And
then I think that also just illustrates how tough it's going to be in order to turn around that downside momentum, right? Just given the pressure and the fact that it's coming from multiple sides at this point, and whether or not that also just caps any sort of upside movement.
So I think, and I think you're starting to see, look at an individual name like Tesla. Yeah. You have multiple analysts out in the last 24 hours defending the name. That's how it starts on the valuation side. So you have analysts come out, whether it's top-down strategists who say, we still like S&P 6,500 by year end, something like that. We like this name off 30%. Even names like Nvidia, coming down from 150-ish to about 110. There's still a lot of people who were in the name at 60, 70, and might look at that pullback as a reason to get involved again. You're going to see, I think, on those individual names and the top-down strategy piece of it, that first cohort of here's why this is more attractive. On the second part, around policy, around tariffs, that gets a little trickier, I think, I think that stuff is always tricky on the way up or the way down for investors to make a firm I want to be, overweight tech now because of whatever, tariff policy. I think that's a more complicated one, but you're going to start to see, I think, given the general bullish slant that we have on the street coming out of what happened in 23, coming out of what happened in 24, you're going to start to see a lot of defense of the individual names, of the individual tilts, and probably as we get into next earnings season, defenses of, our earnings estimates aren't really coming down, and so now the valuation actually looks cheap relative to what we were pricing in. Therefore, we are recommending X, Y, and Z.
I guess also just my question to you is, outside of that and even just the fundamental side of it and more so the rhetoric side of it from the White House, just how much investors are able to ignore some of that noise, and I guess how much tougher that gets given the continuous whipsaw sort of action.
So Lori Calvasine at RBC had a note out this morning about, investors who thought that this was, the literally versus seriously thing, thought this was all just a negotiation. Those investors are clearly mistaken. And I think it really just depends on what your mandate is, right? If you what kind of money are you running? What's your portfolio look like? What did it look like coming into this year? Again, what were your tilts? Were you way overweight this? Did you want to be underweight that? Et cetera, et cetera. You clearly cannot ignore that as an investor, but I do think over the next couple of months, it is most likely, again, given you have so many investors who believe this is a 25-year bull market, this is a cyclical, spin within a secular bull, all these kinds of frameworks, you are going to see more and more investors, more and more strategists come out and say, okay, I can actually make my peace with tariff X on this import, tariff Y on the other, but I don't think that's going to mean we're going to see S&P, I'm not going to model S&P earnings coming down, $10 a share, $20 a share. Therefore, I am comfortable re-entering this trade, that trade, the other trade at these levels. And I'm comfortable, I don't want to say looking through the noise, but I am comfortable with the realities of this is the trade, this is the new trade relationship for the U.S., and I still think the U.S. companies that I am buying and recommending, I still think they will earn. Therefore, I'm going to buy the stocks.
Very much stock pickers market. All right, Myles.
That always is. Come on, please.
All right, Myles, a pleasure.